Prioritizing cybersecurity and fraud prevention in the digital age. In the digital age, safeguarding against cybersecurity threats and fraud is paramount. While embedded finance offers efficiencies and improved banking services, it also ushers in new vulnerabilities. The seamless facilitation of cross-border payments and global interconnectivity can be exploited by cybercriminals, leaving institutions at risk of severe financial, legal, and reputational consequences. A successful cyberattack in this interconnected landscape can trigger a dangerous domino effect, causing widespread disruption and endangering financial stability. One of the most pressing challenges for banks and financial institutions is the development of comprehensive cybersecurity strategies that go beyond ensuring business continuity and disaster recovery to guarantee uninterrupted critical services even when under attack. To address the mounting risk, PwC has introduced an embedded finance risk framework, emphasizing 5 key elements: interoperability, risks arising from the interconnectedness of core components, including technology, for example, APIs, microservices, private cloud, and operational resilience, incident response, disaster recovery. Data security, ensuring the safety, privacy, and control of fractional data usage and ownership. Complex partnerships, tackling risks associated with the unique and intricate nature of embedded finance partnerships. Vulnerable customers, addressing customer-specific concerns stemming from collaborations between financially regulated and non-regulated institutions. Distributed risk, managing the heightened risk transfer within complex embedded finance ecosystems. Effective incident reporting and information sharing are essential for a robust policy response and the promotion of financial stability. The Financial Stability Board, FSB, has issued recommendations to encourage greater international convergence in cyber incident reporting, enhancing incident management going forward. The broader banking sector is equally vulnerable to heightened security threats as digital payments become more prevalent. The need for robust cybersecurity measures in financial institutions and banks has surged as digital transformation opens up new opportunities and markets. Simultaneously, cybercriminals are developing increasingly sophisticated methods to compromise data across the financial landscape. Notably, North America is at a higher risk compared to other regions, as evidenced by Verizon's 2023 Data Breach Investigation Report, which identified North America as the most targeted region, accounting for 70.45% of reported breaches worldwide. In contrast, Europe, the second most targeted region, constituted only 19.93% of total breaches. Ed McLaughlin, MasterCard's Chief Technology Officer, emphasizes the importance of trust in the digital economy. Cybercrime has now become the world's third largest economy, trailing only the United States and China. The average cost of a single data breach has skyrocketed to $3.86 million, posing a significant threat to organizations. The number and complexity of cyber threats continue to grow, with human error remaining a significant risk. As social engineering attacks become more sophisticated, organizations must prioritize cybersecurity awareness to identify scams such as phishing. Whether it involves clicking on malicious links, connecting through unsecured networks, or using weak password and verification protocols, teams must continually improve their cybersecurity skills to keep pace with the evolving threats posed by cybercriminals. The Verizon report underscores the fact that 74% of successful data breaches involve human errors. Even more concerning, Gartner's research found that 69% of employees knowingly disregarded their organization's cybersecurity guidelines in the past year, and 74% of employees stated they were willing to bypass cybersecurity guidelines if it helped them or their team achieve a business objective. While most cybersecurity measures traditionally focus on technology and systems, there is a growing trend toward adopting human-centric design practices. Gartner predicts that by 2027, 50% of Chief Information Security Officers, CISOs, will formally integrate these practices into their cybersecurity programs to mitigate risks associated with human error. The legal landscape of fraud prevention. The landscape of financial fraud follows a similar pattern to cybercrime. According to Juniper's research, online payment fraud is on the rise and is expected to exceed $48 billion globally in 2023. As with cybercrime, North America remains a hotspot for financial fraud, accounting for 42% of global fraud, compared to 26% in Western Europe. Online payment fraud is a pervasive issue, with projected merchant losses exceeding $362 billion globally between 2023 and 2028. The escalation of risk can be attributed to sophisticated scam strategies and the use of AI.